Good morning, everyone. We'll start with monthly recommendations. First, we have Cipla. Current market price 1,389. First target 1,535. It is a large cap pharma company. Their core business is mainly generic drugs. Apart from this, they also have active pharmaceutical ingredients, which is a very small percentage of their revenue, maybe 2 or 3%. Their core market is mainly Indian. Around 45% of their revenue is coming from India itself. Around 25 from US, another 15 from Africa, and remaining from rest of the world. Last year, their revenue growth was only 8%. The company's margin and everything was very stable, but revenue growth slowed down. Mainly because one of their core drugs, leonatide, which was supposed to go live last year, it was supplied from one of their Greece suppliers. So the Greece supplier got a US FDA hit. So because of that, production halted. So it is expected to continue this year. So because of that, their revenue degrew a little bit. But apart from that, margins still remain stable. Apart from that, they're expecting two new peptide launch this year. And their Indian business growth was very good as well. Now this year, for generic companies, particularly last year in US, it was little bad. But in spite of that, the company is going well. One very important thing is there is one blood cancer drug called Revlimid, whose patent went off around few years back. So a lot of generics companies like Zydus, Cipla, all of them sold their generic drug in the market for a long time. So last few years they enjoyed getting revenue from this generic drug. So right now, because competition increased for this Revlimid drug particularly, the sales have almost stagnated. Last year was almost their stagnation point, and from now on, their sales will only drop from Revlimid. So they will have to find other sources of drug. They'll have to come up with new drugs to continue their growth. So similar is the case for Zydus as well. First target 1,104. Current market price 1,104. First target 1,240. Similarly, it's a generic company. Their revenue range is very similar to Cipla, not similar companies. Zydus, on the other hand, is more focused on US. They have majority of their revenues coming from US, around 45%. Indian business is less, I think around 20%. They also have a consumer brand business, brands like Complan, Glucon-D, Max Protein. Their consumer products business have done very well. Consumer wellness business, they had a growth of around 20% this year. Their results was also fine. Regarding Zydus, there are two key drugs which is expected to go, they're expecting to get approval from the US FDA. One is desidustat, other is saroglitazar. Apart from this, this year we saw a lot of this weight loss drugs gaining momentum in the Indian market. So Zydus, they're not making the original drug, they are planning to bring the generic version of it. Even Cipla is planning to do it. It won't have that much great margins, but it is something that they are looking to increase their sales market share in. Apart from this, Zydus is also planning to get entry into China. So that is one market that they will eventually increase their share in. Similar case for the Revlimid applies to Zydus as well. Revlimid sales have almost stagnated. So now they'll have to find alternate drug discoveries to carry forward. Next we have Federal Bank. Current market price 315. First target 360. They are a mid-tier bank, private bank, focused out of Kerala. One of the reasons why we are giving Federal Bank right now, they've already hit their all-time high around 10 days back. Blackstone acquired stake in them around 6 months back. They didn't acquire the entire stakes yet. It was a warrant deal. 25% they have paid upfront, or around 1,200 crores. Other 6,500 crores is a warrant. If they exercise it, they will get around 10% share. It should happen within another 1 year. Mostly they should exercise it. Their warrant price was around 222 rupees. Right now the share is around 315. So this is good capital boost for the company. Apart from that, their results was fine. Private banks gave mixed results. Federal Bank, the result was average. They have very good NRI base, mostly out of Kerala and everywhere else in the bank. So last week, RBI came up with the news that they will, for NRI deposits, they will be increasing the interest rates for foreign currency NRI deposits. Apart from this, normally what is negative for a bank is in foreign currency deposit rates, because rupee is depreciating, they will have to pay the cost for hedging. So RBI said that they will take care of it, that the banks won't lose much in hedging cost. So this is a positive for the bank. And especially because Federal Bank has good NRI base, we are recommending it right now. And this year is expected to be good. If you look at other private sector banks in their range, like IDFC First, they have much more deposit growth. That is not something Federal has. But Federal's numbers in terms of their net interest margin and their bad loans all are well under control. Next, we have Triveni Turbines. First current market price 671. First target is 765. So this is a company that had a very good rally from 2022 to 2024. Their revenue grew almost 30% in that range. Even price also tripled almost, I think, 8 or 10 times by then. This I'll have to clarify, but they had a very good momentum that time. So they are one of the largest players in the steam turbine space. They have a particular manufacturing capability to manufacture 100 megawatt steam turbines. This year, their revenue only grew around 8%. If you look at their price last year, it was poor. Share, I think it has corrected very well, almost 20-30% there was correction. There was no much momentum last year. So even this year, last year's result, revenue growth is only 8%. Their top line growth, their top line revenue is around 2,600 crores. If you look at their order books right now, it is only 2,000 crores, which is nothing to really speak about. It is just an average. 2,000 crores order book for a 2,600 crore revenue company is not that great. But despite this, after the result coming, the share went up. This is because in their current orders right now, exports have increased to almost 50%. So what they're saying is now for all these data centers that is expected to come up, they will need steam turbines to take care of the waste that comes from the other gas turbines. This has not translated into orders yet. This is only inquiry has come from data centers towards them. So this is something we have to actively track over the next few months, next quarter. If there is order book growth with regards to data center orders, then it is positive for the company. Otherwise, price-wise, PE-wise, it is still 56. We'll have to see. This order book status is very important. That is one thing we'll have to keep track of. Finally, we have Mayur Unicorters. First current market price 793, first target 880. This is one of the picks that we gave as our conviction idea as well. They're the largest manufacturer of synthetic leather in the country. So synthetic leather, we can mainly classify them into PVC leather and PU leathers. PU leather, they started their PU leather plant in 2020. But their revenue as of today is only 3% from that. So mainly they are supplying PVC leathers to automobile manufacturers, furniture companies, shoe companies. They gave very good result and they're expected to do well this year also. And exports is around 45% of their revenue. One advantage is, especially if they get any orders from automobile companies, it's not a 1 or 2 year order. The period for the order is long. So that is an advantage. And especially last year, post all this GST cut that came for automobiles, similar companies like this are expected to boost their sales. We saw that clearly in the numbers and it is expected to increase as well. One more thing to notice, this PU leather that I was speaking about, they could not really ramp this up because there's very intense competition from China. So in the future, by any chance, if the PU segment of their business does well, it is much more positive for the company. Coming to last year, our stocks were not really doing well. Nifty gave a negative return of 2.5%. Us on average 5.9%. Tata Power, no specific news, but especially last month was when all these power stocks, we saw correction among power stocks, all this Hitachi Energy, Tata Power. Adani Power did relatively okay, but others, across power sector, we saw a small correction. Healthcare Global almost 4%. Anub Engineering also, the results was good. It just fell in line with the market, no specific news. Star Health flat and Heikel. Yeah, this is one thing we wanted to speak about. When we spoke about the pharma companies, one key risk that they have is, see, pharma companies, their revenue is dependent on US, many Indian companies. So they are subject to US FDA inspections very regularly. So once any news comes that a US inspection happened, and if they are given a warning letters also there are different levels. But for what happened for Heikel, we have mentioned this last meeting as well. One of their plant is shut down. So until they restart it, their sales won't start to pick up. So we were expecting them to that some positive news will come last month, but it has not really come. Results was average, nothing great. So we are waiting for that news. Once that news comes, stock will pick up. Otherwise, fundamentally, no other issues. Star Health also, actually, it's showing good momentum. It's expected to do well. Results is very good this time. Okay, thank you.